The horror show continues. And if you are wondering what I am doing in this cabin today, just wanted to remind that many of us right now have confined us to cabins like these, thinking that there is a huge storm going on around us. Primarily, there are four things on the minds of retail investors. The first one is I am out of money, and this is reality. Today I checked, I have 6,000 rupees left in my main account. The second one is about risk. Most of us right now don't have the courage to take risk at this juncture when markets are in a free fall kind of situation. I'm not talking about Nifty, I'm talking about the real portfolios, the retail portfolios. The third factor is fear. When you see the stocks you just bought or maybe bought yesterday fall 5-6%, like in my case, Kalyan Jewelers, there is a feeling of fear in the air. You can't escape that. The final one, a lot of us feel that we have the talent to catch the fish at the bottom, time the market. Believe me, there is only one way to make money in markets like now. If you are totally out of cash, you have to sell what is bad or least performing and buy what is good. The risk really was at 26,000, and it's not just you alone. I also bought a lot, somewhere around 25,000, 26,000. I also have stocks which are in 20% losses, 25% losses. And I'm sure you have seen enough videos, probably more than me, about buying when everyone is fearful. That time is now. And top and bottom don't exist actually when you are taking the decision. You realize top and bottom after about a week of them happening perhaps. Nifty IT, thanks to TCS, was up 3.4%. In my video yesterday, I said TCS might be up 3% kinds. It actually went through the roof, more than 6%, closing a shy lesser. Rocket volumes, and that took all IT shares along with it. Infosys up 2.5% in anticipation, and HCL Tech 3%, hitting a fresh high. If you look at Nifty in January, Nifty is below both 50 DMA and 200 DMA. Also, Nifty is looking a little oversold. Next 50, the graph is looking worse, just that the 50 DMA is still above 200 DMA, but the bank Nifty price is well below both of them, and bank Nifty is looking oversold as per RSI now. Next 50 is looking even worse in terms of being oversold. The 50 DMA, 200 DMA have crossed, and next 50 is well below both of them. The only index which seems to be recovering right now is IT, that also had touched 50 DMA here, and RSI says that there is more to go, just that this is an index, not a stock. Defense looked horrible and I had to change the ship today. That is because everything was down, and down a lot, 3 to 4% for most stocks. The only good thing I found today in this sector was that Mazgaon Dog did not fall much and volumes were low. This particular sector or subsector should bounce back quickest when there is a recovery. Now, railway stocks have been crashing in general every day. Today also was no exception. Tomorrow is the big day for Dmart, and I'll talk about Dmart result expectations in the Nugget section today. This is one of my favorite stocks and I bought more of it today. The entire top tier was reserved for IT today. TCS had the best contribution to the index, followed by Infosys, HCL Tech, Wipro and Tech Mahindra. And what was down, Reliance is back at the bottom. Next 50 is again back to literally all stocks red. Only LTI, Mindtree and IRCTC were up. No surprises that next 50 was down 2% today. That too on large volumes. And in the turbulent time today, there was only one large green tower, and that was software. And while these small towers may look like there was no contribution for them, this number was 4 to 6%. So all of them were big numbers, just that they look very small compared to this large tower. Oil and gas, power, banking, everything was pulling Nifty down. We are seeing software rising now in the sector list, making money for investors, and consumption is now at number 2, not number 1, just one day at the top. There are times when a V-shaped recovery is bad when it is followed by a large fall, and that was the case today. Even in bank Nifty there was a V, and then the index fell a lot more. It's best perhaps to stop looking at the bank index, bank Nifty, as well as private sector banks, public sector banks, till the storm stops. Bank Nifty was down 1.6%, SBI was down 2.3%. Only one green stock left in the private sector bank space, that's ICICI Bank. Only Indian Bank and SBI remain in non-red in the PSU space. One more sector that right now is in total panic mode. That is because it has gone up a lot and people are totally confused why there is a fall. Angel One is in red now. Can you believe it? And there is not a single green left in the investment banking pack. The cracks in the microfinance space continued. Stocks have again started hitting fresh lows. Spandana was down 10% today. Fusion was down 5.4%. I would have been kicking my heels if I had not sold off the stocks on the second day itself. And TCS results, while I gave it a thumbs up yesterday, I don't think all services companies will have fantastic results. My personal expectation is HCL, Wipro, Persistent also may be okay this time, and Coforge. These will have good results. Four stocks in the metal space hit fresh lows, and I had mentioned them yesterday. The list was the same from yesterday: Tata Steel, NMDC, SAIL, and Hindustan Copper. For no reason at all, the fortunes reversed for the oil and gas sector. Crude is right where it was when this sector got into a bit of euphoria. Unless there is something that I am not aware of, I really don't understand this particular panic in Coal India. This stock is now lower than where we started previous year. The entire pharma pack cracked today. The biggest fall was in Piramal Pharma. This stock was going up like anything on the CDMO theory. This could cool down a lot more. Look at the P, 580. It will take 6 centuries for Piramal Pharma at current EPS to just recover the stock price. I talked about Adani Wilmar yesterday that hit a lower circuit. The exits were on huge volumes, 7x. This is where the circuit came in. For reasons beyond my knowledge, Kalyan Jewelers continues to crack 5.4% down. Today this pack was in general not looking that good. Most stocks corrected. See the sudden pessimism in Kalyan Jewelers? 6 straight days of red. And the bad part is, does not seem like there is a support till about 540, 550 levels. And today FIDI's number are not yet out. I'm shooting the video a little early today. Gold and silver continue to rock. They go up about 0.5% every day these days. USD versus INR 86 and Brent is fast moving towards 80. This may be good news for the oil pack. On Monday you might see a rally again. And there is a storm brewing in the US, another one after the fires in California. Today the payroll data, the non-farm one, will be released. The general expectation is people have jobs, unemployment is low. This indicates that the rate cuts are not really required. Now market is expecting rate cuts. If that does not happen, markets are not happy and they tank. That is because industry will not be able to take loans. If they are not able to take loans, then the growth will hamper. This puts a special negative impact on IT. This is all sentiment. If the market is already good, why do you need interest rates to be low? Now, Indian steel majors are bearing the brunt of slowdown in China. This news is a little confusing and I'll show you why. The news specifically took example of Tata Steel as a victim where the reserves are going down. Let's see this. Around 72,000 crores at pandemic time, 7,313 reserves were highest here. Then they have started going down. Yes, the numbers mentioned in news are right. But what is really happening here? If you see, long-term borrowings have started increasing now, but they came down sharply here from 80,000 to 44,000. And also this increase is not much. So instead of borrowing, they are perhaps using the reserves. Also, if you see, the fixed assets are growing a bit. They were low here, 92, 96, 124. Now they are 150. So reserves are perhaps getting converted into fixed assets. Also capital work in progress, 16,000 crore, 18,000 crore, 19,000 crore. Right now, this is 35,000 crore, 40,000 crores. Don't think the analysts writing these articles look at the numbers before they publish the article. My trades for the day, after a long time, first time after November actually, there's a red day where I have net booked losses. That's because I really needed money. I sold Balkrishna Industries and Sun Pharma, and I bought Dmart results tomorrow. I'll probably release a video soon on Tejas, not just a Nugget, because I feel this is turning out to be a very good company and I would want to invest in it for long term. I bought more of Coal India. This is for tax harvesting. I'll sell off this stock in maybe a day or two. I would probably do the same with Motilal Oswal. I don't want to increase my holding in this particular stocks. And this is not a new buy today. I forgot to mention yesterday that I also own Nuvama in the investment banking pack. This data is of Dmart's growth, year on year sales. Trailing is already looking better than last year. Best case looks most likely to me. Even the worst case is good compared to previous year. And profit line is more or less in tandem with the sales numbers. That's because OPM is more or less finite. If you look at the Q on Q view, yes, there are ups and downs. You can't do much about it. But in general, the trend is healthy upward only. September 24 quarter was no exception. That was on the up. The reason Dmart stock has been beaten down is because media says that Zepto is capturing Dmart's market, even if its sales and profit numbers are increasing. This expected rating is A, by the way, for Dmart results tomorrow from my side. Now, if you look at Dmart's chart, the way it has fallen, 200 DMA has not even reacted to the fall. 50 DMA and the current stock prices are coinciding right now. This is a comical graph for a growing company. No losses here, no negative growth either. Now, this is a fantastic table from Money Control. A lot of brokerages have given consensus numbers for revenue for this quarter. Everyone is around 15,600 crore kind of number on average. And Dmart has already announced that the revenues have risen 17.5%. This number has been given as a part of Q3 updates by Dmart themselves. This is not speculation. Net profit based upon these numbers is likely to come at 830 crores, up 19.2%. What else do you need from an FMCG company in troubled times? Now, if you look at the 5-year graph of Dmart, this is the 5-year PE. Median PE of 117. This is what Dmart has delivered in last 5 years. Right now it is below 100. Lot more affordable than it has been ever in the last 5 years. If you look at the 1-year number, the 1-year average has been 110. EPS has been going up only. I don't remember honestly Dmart being so affordable in my life comparatively. And for a significant part, I have not owned Dmart just because I always found it to be too expensive. If you look at the quarterly numbers, the trend has been fine. 11, 12, 13. There's a bit of fall here, but not much. Then again, 14,000, 14,400. Expenses are generally in line. That leads to a standard OPM of around 8-9%. The net profit has been in line, 690, a bit dip here corresponding to this particular drop, 774, 659. This dip is primarily because the OPM here was higher. The net profit was higher as a result. This is not low, this was high. Standard EPS roughly around 10, 11, 12 approximately speaking, leading to annualized EPS of 35 to 40. Now, one thing I wanted to point out specifically on balance sheet, look at the reserves, the growth of reserves. 19,500 crores is the reserve at the end of September. Let me take a step back. The quarterly sales are 15,000 crores. The reserves are more than a quarter's worth of sales. Can you beat that? Which company in India has reserves more than quarterly sales? What can they do with these reserves? And this business does not give dividends. Shareholding pattern more or less in control. In fact, FIs have increased their stake only by more than 0.5% in the previous quarter. This quarter, the numbers have been so low in terms of stock prices. I believe FIDIs would have increased only, public would have sold. In my opinion, after today's fall, we have 20% on the table. Even if it comes in 1 year from today's stock price, that's fine. Hope this was useful. Treat this only for educational purpose. This is not investment advice. Don't buy this stock based upon this video. Please do your own analysis. Thanks for watching, and I will see you on Monday.